trade recap from 16th of December to 20th of December, an entire week, the past week. So I wasn't really posting any videos or updates regularly like I used to do because the simple reason we are in the month of December, and I usually take entries very cautiously during this month, and you should too. If you ask me, it's best to avoid trading Decembers, and I'll say why at the end of this video. And this video will be pretty passive. I won't be using the replay button like I always do, because as you can see, I have changed the color of my my sell entries and my buy entries, and you'll be able to see these things very clearly after this. So I'll just go through my trades. So this is 13th of December right here. So if you haven't seen this trade recap, and if you want to, just check out the channel. All the videos are updated accordingly, and that's that. And let's go through the trades. So guys, this is 16th of December right here, and for those who don't know, I only trade sessions. I only trade 4 hours every day, 2 hours of London and New York. That's it. So looking back at the market, the last week, which is the market ended pretty sell side, pretty downtrend, and the market is actually indeed downtrend. But the issue is we have been getting a lot of if you see here, I have marked question marks here instead of proper breakout structures, and the reason is this has continued, and at the end we got a liquidity sweep, which is not good for the continuation of any trend. And this is completely normal for December's, but not for any other months. You should note this. So this just means that the market is trying to break the downtrend, and it's trying to move uptrend, and we should adapt accordingly to the market. So this is starting 16th of December, and the highlighted white part at the background is the start of my session. I only trade after my session timing start, not a minute before, not a minute after it ends. Okay, so first, what did the market do? This is 16. So we are in a downtrend, and this is the primary structure we are dealing with right now. This is the primary structure we are dealing with right now in the market. And if you see here, we got a small, and I mean, the minor trend is pretty bullish. If you see here, I have marked a minor breakout structure here and a small inducement right here. This can be bullish, but the primary trend is still bearish. It's still downtrend. So you should keep that in mind. Okay. So what happened here? The market gives us minor breakout structure, and then it went up, and then the market took some pretty small inducement, and pretty good inducement actually for minor structure. And if you see here, the market again went up, mitigated the order block, which led to the inducement, and then the market was able to break this low right here. So only we can see that how much of liquidity was accumulated here. And since the market is we are trading the minor trend for this particular session, because that's what we are provided with, and the minor trend is bullish. So what we do, we first things first, we take our dear friend fib tool, and we put it in the valid high and a valid low. So we see here only a small part of this order block is being covered by the discount zone. So all you have to do is trim this. And if you see here carefully, this is a very important example that I wanted to show you guys. This is the extreme. I mean, this is the structure we are dealing with right now. This is the extreme of the structure, and the extreme order block is the most powerful order block in any given structure. We are marking that obviously, and this is already marked here. So we should always mark 2 order blocks, like you always say. And if you mark this one as a valid order block, it's not really wrong, but what you have to do is you should read between the lines in order to validate a proper order block in the market. So simply ask a simple question whenever you are marking we are trying to mark a valid order block and filter the invalid ones. What did this order block actually do in the market? If you ask me, it didn't do anything. Did it break this high? At least did this order block break this high? The answer is no. The liquidity, this order block led to sweeping this high, and the one who broke this high was the liquidity accumulated in this small zone right here, and only then we got a breakout structure. So who broke this entire structure? Who broke this entire structure? The breakout structure happened here. If you see properly, and who led to this breakout structure? The answer is pretty simple. It was this order block right here. So that's the order block we should focus on. But sadly, it's not fully covered in our discount zone, and we only take entries in the discount zone, and that's the reason I'm just trimming this order block, and I'm going to take entry from the small zone right here. And that's what I took, and my session started, and I'm just following this minor trend, as I say, even if we are in a downtrend in our primary structure. So I took this entry, I took my entry here, and I placed my stop loss about in this order block right here, just covering the small liquidity zone. And if you see the market, this is the winner. This trade was a beautiful winner. I got about 3.35. But what do we actually do all the time? I use fixed take profits, so which is 2.1 RR. So this trade was a winner, which is pretty good. And what else happened? And if you see, this high was taken. The market went up and it took this high. The high I'm talking about this is this high, which is a very strong high. It has high liquidity, and that's the reason the market completely pulled down after sweeping the liquidity above this high. And if you see properly, we didn't get a breakout structure, only a liquidity sweep. But still, we are actually in a downtrend, and our primary structure is still in downtrend. Okay, so this is the structure we are dealing with right now at the moment. So what happened? We got a minor breakout structure right here, and that's a fractal breakout structure. Still, this primary structure holds some value, because if we got a breakout structure, then things might have been a little bit different, but we didn't get a breakout structure. So still, this little minor structure is significant. And okay, if you see properly, my session has ended right here. No more trades, and the market goes on. And like I said, guys, even if I marked this order block, and even if the entry and the price mitigate this order block only after my session is done, you can see how it reacts to this order block. It doesn't even react. It doesn't even flinch when tapping into this order block. It just completely obliterates this order block. And the reason is simple. Like I said, we filtered and we questioned ourselves what this order block actually did, and it didn't do anything. It's that simple. Okay, so as I said, extreme order blocks are the most powerful ones. We got inducement, and even if this order block was failed, even if the liquidity was swept, we got a good upside movement right here. Okay, so I took an entry right here in this order block right here, and I will explain. We got an inducement right here, right? We got an inducement right here. Like I said, this minor structure still holds some significance, and even if this high was taken, we are dealing with this entire structure, and for this entire structure and for this minor structure, the extreme order blocks, for both of these structures, this single order block is the extreme order block. So it's the same order block we're dealing with. So it's a pretty powerful one, and after sweeping the liquidity below this order block, the market gave us an inducement. Pretty weak inducement, but it's okay for trading December's actually. Okay, so again, a very what did the market do? It went up, a small pullback, a one candle pullback, which is completely untradeable. And again, it took this, and then it gave us a small breakout structure at this point right here. If you're taking this as an inducement, you're pretty wrong. You should not do this. The reason is just a single candle doesn't account to inducement. But still, I'm doing this because it's December. We can't expect to get any clear market structure at this point of time. And I'm trying to trade this structure actually. So what does the market do? The market breaks this structure. So this is the structure we're dealing with right now. This is a strong low. And again, the market gives us a breakout structure right here. A weak breakout structure, because all these are inside candles. So just a single candle came outside, and like I said, we are pretty bullish after this inducement happened. We are bullish in our minor trend, and that's the reason I took this entry right here, and this entry failed me, and we got a -1. And if you ask me the reason, there's no actual reason for this, because like I said, December's like this. Okay, now what did happen? The market came down, it failed this order block, which is completely fine, and again it failed this order block, which is also completely fine, because we're not really trading anything in this order block. So the market took this low right here. So what is that low actually? This is the low that led to sweeping of this high. So just by sweeping this high, if you can notice how much the market has changed downtrend in our minor structure, this guy is the one who caused the sweeping of this high. So you must now understand how much liquidity he must have under him. Okay, so like I said, I didn't take this entry. This is actually a beautiful entry if you have this in your edge, and if you have back tested, and if you have this in your strategy. I don't have this particular entry in my strategy. So if you see here, it's such a beautiful entry, but I didn't take this entry because of two reasons. One, the market is still bearish in the primary structure. All that's happening here is swinging. The market is just swinging. What's that? Ranging. Yeah, the market is just ranging. And this was a very good order block, but still I didn't take this because this order block was pretty weak. Even if it gave us a big movement, it was pretty weak. But if you took this entry, or that's a good entry. Okay, now what happened? The market gave us breakout structure, if you see here properly. So which means we have turned downtrend in our minor structure. So our primary is also downtrend, and now our minor is also downtrend, which is a beautiful time to take sell entries. So that's what I did here. If you see, the market went up after taking this, giving us a breakout structure. So this order block is pretty irrelevant, so I'll just remove this. Okay, now the market went up, a small pullback, went up, and I took an entry from this order block right here. If you ask me how, the answer is pretty simple. Like I said, the minor structure has turned downtrend. So this is the high we have, and this is the low we have. We're dealing this with right now. This low doesn't have an actual inducement, and that's one of the reasons why you should have taken stop entry at this point. But I took limit entries simply because we can't rely on stop entries when the market is moving more fundamental, and it's December months, the market move very fundamental, not technical. So I just didn't really care even if I got stopped out. So I just took a limit entry. You should not do this. I do this because I know the proper risk management of my strategy. If you know the proper risk management for your strategy, you can do this obviously. So this trade was a losing trade for me, but the market did move about 1 RR, which is insignificant for me. Okay, I'll just remove this. So if you see here, again the market went and it broke this high. So what is that high? Let's go back. What is that high? We have already discussed that this low is the reason this high was swept right here. So after sweeping this high, the market swept this low by coming down. And after sweeping this low, the market accumulated so much liquidity and it went up. Even if the market turned downtrend, even if the primary structure is downtrend, still the market had enough power to go up, go bullish, and it gave us a break of structure here, which is really this breakout structure is a pretty strong breakout structure. But the following movement after the breakout structure is pretty weak, if you ask me. And the reason is because this structure doesn't really have a proper inducement. That's the simple thing. That's the simple reason you should look at. Okay, now let's go to the next day. And it's pretty simple, guys. After this, what does the market do? You can read this simply. The market comes down without no inducement. A small pullbacks. It reacts here, and then it takes the liquidity from this small high, and then it breaks this structure, which means this is a pretty valid structure at this point. Okay, now the market comes down. So like I said, this is a pretty strong, even though if this is a pretty strong breakout structure, this upcoming structure doesn't really have an inducement. And now we are going to take trades because my session timing has started. And already this order block was invalidated, and we are grateful that this didn't happen during our session timings, or else we would have taken some sort of trades at this point. But here this order block is in our session timings right here, if you see. So I took a stop entry right here, and if you see here, this is a beautiful time to explain exactly what is a stop entry. So I'll just remove this. So guys, a stop entry is a very simple concept. It's just taking trades pretty passively instead of aggressively, like the limit entries and market execution. So what happens is, how to take stop entries is pretty simple. So first, it's in my session timings, and that's the first parameter I look at. Second thing I look at is the price has mitigated this order block right here. That's the second most important thing I look at. And you should note that the price should not come below this order block, which means the price has failed the order block. That should not happen. And the price comes here. If you see here, candle after candle after candle, it comes here. So what I do is, so I'll just start from here. So after my price has mitigated this order block, I put my stop here. I put my stop loss just below this candle, and I just extend my stop loss a little bit to give some breathing space for the market to move towards the side I'm wishing to. So now if you see, the stop loss is 28 points. I just increase it, like 28, 48 is to 2 pips, so I'll just put 50. So this is how I do it. But what happened here is, so after I put this entry right here, what I'm looking forward for the market to do is, the market should open somewhere within this high and this high and this low, right? So the market opens here, and what does the market do now? It again goes down and breaks this low, which means my stop entry has been invalidated. So what I do, I put my stops here, I put my SL here, like I said, just extend it 42, so I'll just put it 65. I just round off it a little bit. So what happened right now, again the market opened right here, and it did the same thing. It, without breaking this high, it broke this low. So now again my stop entry is invalidated. So what do we do now? We just do this on the next candle. So this is what I did, guys, and it's 54, 64 and 74, and I'll just put it 75. Okay, this is the entry that I took. I got tagged in, but my stop loss was mitigated in this entry, so it's a loss for me. So I'll just minimize this, and I'll just delete this. And I took a limit entry for the extreme order block we have right here. I have mentioned this countless times. Extreme order block is the most powerful order block in any structure. And how did I do this? The answer is pretty simple. This is the low. This is the low we have. It broke this entire high. So this is the only extreme order block we have. So that's the reason I took my entry right there. A limit entry, which is, so guys, I will be posting the difference between limit entry and stop entry in my main channel, detailed version of them, and how aggressive the limit entry is and how passive the stop entry is. So check that out. Okay, so I took a limit entry, and what did the market do? This trade was winning, as you can see. The market went more than 2.1 pips, but 2.1 is our fixed TP, and I took my winning trade here. Okay, which is cool, and which is not cool. I mean, it doesn't really matter if our trade is winning or not. All we know is at the long term, we will be profitable. Okay, that's all we have to know. just winning and losing and taking all these things personally for every single trade every single day. That is a bad practice in trading. Okay, now what does the market do? I'll just move this slightly here. I'm very distracted by these things. I'll just change this color because it'll be more visible to the viewers. Okay, so now what did the market do? After mitigating this R block right here, the market took this low and then it gave us a small inducement. And what did the market do again? It mitigated in this R block, came down, mitigated, gave us a break of structure. A minor break of structure, but still it's perfectly fine for the time frame I'm dealing with. And then it gave us a break of structure right here. So guys, this is a liquidity sweep. You should know this by now. This is just a liquidity sweep. Let me draw this. If you see here, the market is just wicking above this high. So we should draw as a wick. So if you see here again, the market is only wicking, which means sweeping. The market is just sweeping. And again, it does the same thing there, same thing here, and we got a BOS only here. So now this entire structure we should take into account, not just this structure. Okay, we got a minor order block here. The market goes up, comes here, goes up, goes like this, takes inducement right here, mitigates, and again it breaks this high. All right. So guys, I mean, marking the valid order blocks in any structure is a very, it's one of the main components of trading smart money concepts. So guys, I have mentioned this in my main video, in my main channel. If you don't know the 4 topics: market structure, liquidity, order blocks, and inducement, you should not trade smart money concepts. You can trade strategies. You can just use a single concepts that I mentioned, like you can use market structure and you can use your own strategy and you can trade, but you should not trade SMC without knowing all these four topics, all these 4 concepts. Okay. Now, what had happened? The market broke this structure right here. We have mentioned this earlier. So it just wigged, but it's okay. It's okay because I can just take this as a change of character. And what happens now? My session timing starts and we get a break of structure here. So if I was actually looking forward to take an entry about, okay, so I was looking for take entry in this order block right here. So this is a lower time frame order block actually. This is where I was looking forward to take an entry, but I didn't take this entry because my session timing was completed. So this is the only entry that I took. How I took this: pullback, breakout structure. I marked an order block and I just took an entry. That's it. So was this a winning trade or a losing trade? This trade was a losing trade for me, because even if the market gave went about 1.72 RR, we only close our trades at 2.1 RR. So this is a losing trade for me. Okay, doesn't matter, like I said. And we got a pretty minor BOS right there. Actually, it's an invalid BOS, so I will mark it with a question mark. The reason is simple, because we didn't get a proper inducement for the structure. Okay, I'll just remove this. It's distracting and annoying. So yes, this is what happens, right? In the month of December, it breaks this low, it breaks this high, it breaks this low again, and it just gives us the improper breakout structure for this high right here. And then again, once again, if you see here, it again breaks that low. So these are the reasons why you should avoid trading these numbers. Okay, let's go through the other trades. Okay, so what did the market do? It came down, gave us a beautiful inducement right here, mitigated in this extreme order block. Like I said, extreme is the most powerful one, and we didn't take because it's not in my session timings. So which structure, the important point, which structure are we in right now? We are in this structure right here. This is the structure we are dealing with. If it breaks this low, it's bearish, and if it breaks this high, it's uptrend. Okay, sorry about that. So market comes down, my session timing starts, and this is a pretty interesting concept right here. So if you see here, my session starts, the market comes down, and it gave me a minor breakout structure right here. So what did I do? I just took my fib from here to here, and I took an entry right here. Why did I take this entry? The answer is simple. I took this inside candle as a small inducement, and if you see, we are in the premium zone right here. So I just took this entry right here, and my SL was mitigated here. If you see a slight mitigation of my SL, but right after mitigating it, you can see the market gave me about 2.74, or I mean a winning trade. If the SL was not taken, this would have been a beautiful winning trade, but it's okay. These things are inevitable in the market. You should be ready to embrace these kind of things. Just after slightly taking your SL, the market will go up. Probably you should have seen this multiple times. It's okay. Just embrace this with the amount of data you have by backtesting. So that's it for this session right here, and London session. So what does the market do? It goes up, uses a breakout structure right here. And what does the market do? It again comes down, sweeps this low right here. So it's very range bound, and thankfully the market took this low right here, which means I will be looking forward to take downtrend entries, sell entries. So guys, since the structure is coming here without any proper inducement, I was not really ready to take any type of entries. So this is the only entry I marked. The reason is because we have a small double top here, and even we have a trendline liquidity right here. Well, it was already mitigated. If you see here, this trendline liquidity was already mitigated by this structure, but it's okay. We had that, but I did put my entry, but I did not get tagged in, so I missed this entry about just 2 pips. Wait a minute. So just 1.9 pips. 2 pips is the distance. I missed such a beautiful entry. If you see here, just look at this. I mean, we will definitely close our entries at 2.1 RR, which is about here. But if I just took this, it would have been 18 RR. I mean, it's okay to look like this, but nothing useful speaking about that. We didn't get tagged in. I'll just delete that. Okay. So we got a breakout structure right here. So which is the structure we are dealing with right now? Still, we are in this structure. Like I said, we got a BOS here, we got a BOS there, and we were in a bullish trend, and the minor turned slightly bearish, and again it turned slightly bearish. Now again it broke this, so again it broke this minor structure. So now both the primary and the minor structures are bearish. So what does the market do? We had no entries during this London New York session. The FM, I think this was FOMC. I didn't really look at this because it wasn't during my session. So we got a strong down moment, and the market broke our primary structure after. Wait a second. So the market broke our primary structure right here. After about 1, 2, 3, 4. After about 4 days, about 1 week. Which is, I mean, it doesn't matter, but you should know these things. So what do we do now? For our primary structure, we take our fib levels, and we mark our fib levels right here. So that's the fib level for our primary structure. Okay, now let's go trade from whatever structure we get. So here, what does the market do? It's pretty simple. A pullback and a small range bound and a pullback right here. and here it was an insignificant breakout structure because this structure doesn't really have any inducement. And now my session starts. So this is a very interesting trade that I took right here. So after my session starts, what does the market do? I was looking for to take entries in this order block right here, hoping that the market will sweep this high and it will take this an inducement. So but what happened is I placed this limit order, but as you can see it didn't get mitigated during the session timings. So after we got a small, after, if you see here, the market came here and it just started going up. After the market did this is a fractal breakout structure for me. So I took a stop entry in this order block right here, which I have marked as you can see. So what happened here? So guys, the only thing that went wrong was the size, the mere size of this candle. So it's 84, 94, 104, 105. So this is where I placed my SL, and the market gave us about 1.94 RR. But this entry was lost for me because obviously we close our entries only at 2.1 RR, and this gave a slightly small return, and I didn't close this entry. So it was a loss, but it's okay. But you should know why it was a loss. And as you can see, the only reason is because this candle was too big and it didn't really help us to take stop entry at this time at the market. Okay. So it got mitigated in this order block, but I didn't take any entry because this is our zone, and since we are in sell side, this is discount zone, and the above side is premium zone. So when we are downtrend, we should take entry only in the premium zone, alike to what we do in the uptrend, where we take entries only in the discount zone. That's it. Okay, so now the market is coming downtrend. Not really a BOS, but okay. If you're marking this as an inducement, you're completely wrong, and the reason is simple. It's just one candle. You can mark this as an inducement. So, but I can mark this because I follow my strategy. I have backtested my strategy. I have tons of data. I can do this. But if you can do this, if you ask me that, a big no. You should not do this. If you have data, if you have backtested, who's going to ask you any questions? You can do whatever you want. Okay, a minor breakout structure without no inducement. So this is a question mark. Okay. So what's this? I think this, I just put this stop entry right here. Okay, let this be right here. So, and we got a small pullback, and we got a minor BOS right here. Once again, insignificant BOS. So we will put a question mark. Okay, so like I said, we should not take this as an inducement, and this one on the other hand is a pretty good inducement. So guys, like I said, I was waiting to take this entry right here. This entry during the London session of the date 19th December. This is what I was waiting for. I put my stops right here, but I didn't take this entry obviously because it's not in my session timings. Sadly, what happened here is the bullish side of the market lost to the bearish side, and you can clearly read this in the market. What did the market do? After breaking this high right here, it went up and it accumulated liquidity right here, a live liquidity. It accumulated live liquidity right here. It purposefully gave us a weak or an incorrect or an invalid breakout structure. And what did the market do? It came up, it set up all these things. It set up to move above without mitigating this order block right here. So all this, okay, I'll just come to the story. So it came down, it took all liquidity below this structure right here, and it mitigated this order block. So why did the market went through the trouble of doing all these things? The answer is simple. It wanted to go uptrend. It wanted to break this high. But what happened here, as you can see, the market was unable to do that, and this low was broken. So after the moment I saw this low being broken, I was pretty sure that the market is going to be downtrend, and that's what happened. The market went downtrend. So okay, so here coming to the session and coming to the trades, I didn't really get any good entries, so I got a sweep once again, and a breakout structure right here. This is where we got a breakout structure, and if you take my fib right here, so guys, I didn't really take any entry at this session, at this New York session right here, and the reason was simple. I was waiting for an entry at this order block, and it really it was an pretty much of wishful thinking, since I'm dealing with December, but the market didn't come there. No trades at all. So let's just conclude this pretty fast. I'll just check how long I'm recording this. Oh, it's about 35 minutes. Okay, I'll just end this pretty soon. Okay, so this is the last day of the session. So guys, if you see here, it's a pretty interesting concept. What did the market do? It came down very strong bearish movement, and without inducement, it started giving us minor breakout structures. It got mitigated in a order block in the discount zone, which is bad for downtrend, and it came down. It took this low, and if you can understand this properly, the market did all these things to set up a proper inducement for this bigger structure, for this bigger primary structure right here. So just for the sake of setting a proper inducement for the structure, the market went through all these troubles. Okay, so and also another thing to note, we only got a sweep, a liquidity sweep. If this candle formed during my session, I would be very happy to take a stop entry in this candle. Putting my stops about 135, I'll just put it 155, and I would have definitely taken this entry because it's very beautiful bullish sign. But of course, it's not within my session timings, so I did not take such an entry. Okay, so that's what happened. After that, we got a minor BOS right here. I'll just mark this as an insignificant BOS. So these both are insignificant BOS. That's why I mark this with question mark. And I took an entry, as you can see right here. I took this as an inducement, and I took an entry right here, and this entry was a winner. So guys, most SMC traders put their stops pretty tight. So let's say this is the order block they're dealing with. They just put it like 0.5 pips below that. So this is how most SMC traders trade. I mean, at least the profitable ones that I know personally. But I don't really like this because I mean, there's nothing to like and not like in the market. This simply doesn't follow my strategy. If you're willing to sit at the computer for about all the time, about for at least I think 8 to 9 hours every single day, you can go for these kind of approaches where you're trading concepts and you're taking very good entries. I mean, of course, these entries are very strong, very profitable, has high win rate, has a return but I don't really like that. I only trade 2 hours, like I always say. So that's why I just put my stops pretty high, and I covered this order block here also. So this trade was a winner, as you can see. Okay, so that's for London session of the date 20th of the December, and we got a minor breakout structure right here, and this breakout structure is pretty good, pretty strong actually, because we got a good mitigation and good inducement. So okay, so this is the last session we are going to look at for this particular week. What did happen here? We got a BOS right here. Who did this BOS? It was done by the liquidity accumulated here. This liquidity was completely demolished. So Now we have to trade with what the structure presents us with. Okay, this is the low, this is the high we have right here. Okay, so this is the fib of, as you can see, and the good order block we have right here is this one right here. And why is this the better order block? The answer is pretty simple. The one who broke this was here, and who did this was this order block right here. And none of these guys did anything useful, so that's the reason I just simply marked the extreme order block right here. And of course, this is the most powerful for this structure. So this is the most powerful extreme order block, and this order block is the only significant 50% order block. We should mark 2 order blocks all the time. So I put my stop limit entry right here. I was waiting for the price to mitigate this, but as you can see, it didn't happen. So what did the market do? It took the inducement from this low, and it gave me a minor, this is a very, very minor breakout structure. But the reason I am considering I took this entry, as you can see right here. And let me explain why the reason why I took this. It has to go here. So as you can see, I have marked an order block from this structure right here. So you should note a very important thing. These 2 candles are consecutively inside candles for this candle right here. So what you should actually do is, you should mark the entirety of this candle as your order block. You should not just mark this candle as your order block. But according to my strategy and according to my backtesting, I mark this as an order block and I take this high, since this is an inside candle. But if you are trading SMC for the first time, this is what you should do. The entire outside candle that these 2 inside candles are within, you should take all these things as order block. So let's see what happened now. As you can see, a beautiful mitigation right here. So I when this happened in the live market, I saw this, and sadly my strategy was not respected for the 20th of December, which is completely okay. It's completely okay, because I have taken it benefits me some other time. That's how strategies work, right? But I took this entry, as you can see. So yeah, that's the reason. That's the reason I explained all these things. So I took this entry right here because of the mitigation of this order block, and okay, I took this candle order block, as you can see, and I took a stop entry. So guys, even after I know all these things, even after I know this is how the market movement went in the past, and this is what's happening in the present, even after knowing all these things, I took only stop entry, which is passive, instead of taking a limit entry. So you guys have a lot to take in from this. Even after doing all these things, the reason I took stop entry is simple. The reason is, this is an insignificant breakout structure for me. This whole structure is insignificant for me. They didn't do anything except break this completely irrelevant minor high right here. So that's the reason I took a stop entry. And this, just look at the size of this candle. It's about 1.6 pips, 1.06 pips, which is sick, which is simply sick. But still, my session, this was within my session timings, as you can see, and that's the reason I took that buy entry, and I got tagged in, and this was a winning trade. And the market went about 3 hour, but we closed our TP at 2.1 RR. Okay, so guys, that's how this entire week went for me. And so guys, now I'll just also say my prediction of what's going to happen after now for this particular structure. So there are a lot of imbalances right here, and I marked this. If you see here, I have marked this blue thing right here, because this is an order block in the higher time frame. I don't trade higher time frames, but I look at higher time frames then and there, so that I can read the market more easily. So that's what the market can do is, my good analysis, my good assumption is, either it goes here, taps into this very strong 5-minute order block, or else it just goes here and tags just mitigates this order block somehow, and it is going to come and break this low. This is my prediction. But one small issue we have in this approach is, we didn't get a breakout structure right here, so this can even be a trend reversal. The market can go up, but it doesn't really matter to me actually, because I just trade whatever structure I am presented in the particular session. But for you guys, maybe you might get some idea of how the market moves. So I'll just count the winning and losing trades ASAP for this entire week. Okay, a winning trade right here and a losing trade right here. So +2, -1, which is equal to +1, and again a -1, which is equal to 0. A break even, and if you remember, we took a stop entry here, so a -1. Now it's -1, and we took a limit entry right here, so now it's +2, which is -1 +2, which is +1. And here we got a sell entry, and it got mitigated our stop loss, so it's 0. Once again, it's break even, it's 0. So this is a painful thing about December. We always trade pretty much in break even zone. So if you remember, the price swept our stop loss like this, so now it's -1, and I don't think we took an entry here, so the price is still the return is still -1. Okay, what happened here? Was this a winning trade? No, this is a losing trade. Once again, a -2 now. And what happened here? I didn't take any entry right here. Okay, for the last day, we got a +2 right here, which means -1 +2 is +1, and once again a +1 right here. Just think about this. If I took this entry also, it would have been +4, but okay, we got a +2 here, so +1 plus +2, it's +3. So +3 or 3 RR is the God-given merciful return for us for the week starting from 16th of December ending to 20th of December. So that's the reason I didn't really post any daily updates, guys. And for the next week, I'm recording this video about 21, and till December ends, I won't be really taking active entries like I always do in the market, because it's December. And but still, I'll be taking entries, very high probability confirmation entries. And if I could, I will do some live streaming during these sessions. So okay, that's it for this video. I hope you got some insights into how I approach the market and how I take my entries. See you guys in the next one.